Hi, Jim Freeman again from Silverbridge Senior Transitions. Here today with Deanna O'Neal, and really happy to bring this little interview to you because she's got some important things for people to know, seniors and their families to know about long-term care insurance, which is a hot topic, when to buy it, what to buy, what to look out for. Um, but Working with seniors as I do, I have run into situations where seniors have long-term care policies and they needed them and they weren't able to exercise the benefit. So that's a thing I want to ask Deanna about. But before I do, I'm going to ask her to tell us a little bit about her personally. She's a Kitsap County resident, and well, I'll just let you go ahead.
Well, Jim, I'm very happy to be here today. And just to introduce myself, I am Deanna O'Neal. I am the owner of Key Financial, which is located here in Kitsap County. I'm an independent financial advisor who specializes in long-term care and life insurance. I want to make sure that everybody understands what they have before they get to it, and we'll talk about that in detail. But really, it's just knowing where you're at and the people that you're working with. So, just a little on my background. I've been in the financial world for over 20 years. I have worked in high corporate as well as independent and nonprofit work. I bring all of that experience to the residents of Kitsap County now so that I can educate. I am an accredited financial counselor and specialize in that financial education space.
Okay. So just out of curiosity, what was your corporate career like?
It was fun. Right after college, I was actually a commodities trader. I worked in energy commodities at a firm, and I'll leave their name off the table right now. But it was one of the big firms with two names that always adds extra names and loses extra names. But it was high-paced. It was really exciting working with the New York Mercantile Exchange, and I found it fascinating, but not something that I could keep up with for my entire career.
Mm-hmm. Okay. Just for people that maybe don't know, what is long-term care insurance?
Long-term care insurance is, well, kind of like car insurance. It is something that's going to pay when you need it. And it's always the if I need it. Well, Jim and I've talked many times, but really the statistic is about 70% of people will need some type of long-term care. And long-term care is anything from in-home nursing to assisted living to full-time nursing care, memory care, those kinds of facilities. And so the insurance, long-term care insurance, is to provide, to pay for those, basically to cover the expenses of everything from that in-home nursing all the way to that full nursing care. And it really is kind of that lifeline, because those can be so absurdly expensive. I don't know if you've looked at the statistics lately, but in Washington State, if you're in a full-time nursing facility, it can be upwards of $10,000 a month to pay for that facility.
But you said something interesting. So it can apply to people who have care in their home.
Correct.
Okay.
You can actually use a lot of types of long-term care insurance for just supplemental. You know, say the family's taking care of their family member, but they need even adult daycare, or they need just in-home nursing, anything like that.
Okay. All right. So people, start thinking about this probably too late because very few people actually own long-term care policies. Approximately how many of the population would you say is covered?
Really 10-15% maybe. And again, you are right. A lot of people look at it later and think that they can't get it. There actually are long-term care insurance companies that will offer policies up to even age 80.
Oh.
And so there is an ability. It is better to get it when you're young, because just like any other type of life insurance or health insurance, it's cheaper when you're young.
Right. But you just have to pay for a long time.
Right.
Okay. So what's a good time of life to consider analyzing and looking or purchasing a long-term care policy?
My answer is going to be the same thing as with investing. Now.
Now.
Today is the day to look at it. Even if you're someone in your 20s, 30s, 40s, or 50s, it is really ideal. You want to be able to get it so that you are protected. And a lot of people worry about the expenses. They worry about, I'm gonna have to pay this insurance for the rest of my life. Well, sometimes you can actually get it where you're not really paying very much to it, say as a rider on a life insurance policy.
Mm-hmm.
Anybody who has kids, anybody who owns a house should have life insurance, because we want to make sure that we're not leaving burdens to our family. Well, if you have a life insurance policy, you can actually throw that long-term care on as what they call a rider, and it can be very minimal costs. And so to someone in their 40s, I mean, we can talk $20 a month additionally, and then it provides that amazing benefit later in life.
That's four Starbucks coffees. So you not only sell life or long-term care insurance, but you sell life insurance and other financial products. So
Correct.
Why do you do that? What is the purpose of having an array of products?
Well, the purpose is to have a happy and healthy retirement. I guess you would say the slogan for my company is, it's not always about wealth, it's about financial health. Because we need to be financially healthy, and part of that financially healthy plan is having enough money to live off of in retirement, having the right type of protection, having the right type of insurance, making sure that you are covered in all aspects, because if you're covered in all the different avenues, you can live the best life, you can be happy, you can be mentally free and not have stress and anxiety about it. So I do offer, as a combination, everything from that life insurance all the way through full IRA, mutual fund investments as well.
So how difficult is it for people to obtain insurance, either long-term care or some hybrid of life insurance? What are the qualifications?
Again, there are different types, and so each type of insurance has a little bit different qualifications. The standard through the industry to get a life insurance policy or a long-term care insurance policy is there is a medical check. They want to make sure that you're, in the insurance world, not a high risk for major diseases or anything like that. But there are types that you can actually get without medical. There are self-funded plans, there are plans that you can put basically an investment into and it will grow and be used for long-term care insurance. So a lot of people get really nervous thinking, oh, I'm not going to pass the medical, so I can't do this. And that's not true. You can find there are alternate ways to fund long-term care insurance even without a medical exam or medical checkup or anything like that.
Okay. So we were talking earlier, and I was telling you about a client I had who was an 80-year-old widow, and she was pretty astute. She had savings and investments, and her home was free and clear. And she had purchased, a long time prior, a long-term care insurance, which she was told was, top of the line type of thing. And she just assumed that when the time came for her, she had some memory issues, that she would be able to use this policy. And she found a nice assisted living community to move into close to her son. And it turned out that she couldn't use her policy because it didn't check certain boxes on what I guess we call activities of daily living. Can you tell a little bit about that? Moreover, what should people look for when they're buying these policies?
Absolutely. When you're buying a long-term care insurance policy or a rider on a life insurance, you want to make sure that you understand it first and foremost. And if you don't understand it and your agent is not explaining it to you, maybe you need to talk with a different other agent, because knowing what you have is first and foremost. But activities of daily living is going to be a common term. ADLs, they get truncated to a lot. And there are 6 activities of daily living that basically, if you can't do 2 of those, most long-term care policies will kick in. Also, cognitive decline. And this is something with the insurance industry, it has changed. I mean, everything changes over the course of years. Something that was sold 30 years ago may not be the same product that is being sold today. Kind of like cell phones. We're not using flip phones anymore, right? We're all using smartphones.
Oh no, sorry. I still have one.
Well, for the most part, but the industry changes. And so long-term care insurance policies that were sold maybe 30 years ago haven't kept up. And so if you don't know what you have and haven't reviewed it, so maybe you have one, it's time right now to review it and see if you need to exchange it. And you can actually exchange them or upgrade them to the ones that talk about only utilizing 2 ADLs. Well, those are, back to the original question, activities of daily living are things like not being able to transfer in and out of your bed, not being able to feed yourself, not being able to bathe yourself. And so most policies are looking for the ability to not do 2 of those, and that's when they kick in.
Okay. So 2 out of
6.
2 out of 6, okay.
Or cognitive decline, when it is actually diagnosed, can cover
So it's important to read the fine print that
Mhm.
when you want to exercise your benefit, that, what are the qualifications? And,
Right.
how important is it when an adult or somebody is buying a long-term care policy? Should they involve their families in this?
Oh, absolutely, 100%. When you think about it, when is a long-term care policy going to kick in? It's going to kick in when you are starting to need more help. And at that point, a lot of times memories aren't as good. It's just part of aging is we do forget things. And so if you haven't informed your family of where your documents are or what's actually what you have, they don't know where to go and they don't know how to utilize it. And so involving the family in the planning process is a lot of times difficult. People don't want to talk about, their end of life, but it is absolutely necessary because the children or your grandchildren are going to be the ones who are actually going to be dealing with a lot of it when you can't.
Okay. So, and by the way, on occasion when I've worked with seniors, they don't know where their insurance policies are, and they don't know where their will is, and they don't have the originals. And is it important to have the original policy in hand in order to exercise it?
It's helpful. And with most companies nowadays, you can get a PDF version of it. It can be digital. We can do digital lockboxes for almost everything.
Okay.
And there are a couple companies actually that I work with that provide basically those kind of digital lockboxes to give you security, to know where everything is, and give a trusted person access to make sure that somebody knows where it is. It's kind of like we're all like, oh, where's grandma's will? Is it somewhere under her bed?
Yeah.
Digging through the house is very difficult.
How many accounts does she have, and all that. Okay. So I, Silverbridge Senior Transitions helps people at the point where they need to move, pretty much, or they have made a decision to move. And what we find is knowing where the documents are, knowing who the players are, who's the DPOA, who's going to make the medical decisions in the event that that's necessary. But most people don't have long-term care insurance. So when they get to that point, they have really two options. One is to spend down what they own, their assets. The other is to try to qualify for Medicaid. On different interviews with Aaron Paker, an attorney, we have talked about how you can plan for using Medicaid as a long-term care option and still preserve your assets. And you and I were talking a little bit about what are the implications to a spouse if one or the other spouse has to move into long-term care and they have insufficient means in order to pay for private pay.
Mm-hmm.
You want to talk about that a little bit?
Absolutely. And there are ways to preserve the assets. It becomes very difficult for the spouse that is left at home because they basically can't own anything. They can't have a lot of access to those funds. And so really it's preserving the assets for the next generation. It's not for the spouse. And so the spouse ends up in between a rock and a hard place because it's very rare that both spouses go into some kind of assisted living at the same time.
Mm-hmm.
And so they end up a lot of times moving in with family because they can't really own anything. They can't really there's a small supplement they can get. And the details obviously are per state. There's a little bit different with the laws, but it's really limited. And we've seen it a lot that they think, oh, I'll be fine. But that's not always the case. And then it ruins the relationship a lot of times. And that is really frustrating because the spouse that's left at home thought everything was good.
Right. But nobody really knew.
Right.
So I find that, most people who are in that circumstance, usually it's their home that's going to be the source of money to pay for their care. And that's true for most of us. But in the case where I work with clients and we take care of their stuff, maybe a financial advisor takes care of their financial assets and gets it positioned correctly so they have access to the funds for care. We sell the house, they get a check from escrow. Sometimes it's a pretty big check, it can be several $100,000 or millions even. But what does one do? You say that you're, in addition to selling life insurance, you advise people or you help people make their investments so that they're safe and secure and provide a lifetime income. I want to talk a little bit about that. What does a senior do if they have a few $100,000 from the sale of the home to wisely invest their money to generate the income for their care?
Of course. There's a couple different options. There are different investments that can be low risk, and then there can be those that can actually be no risk. And so really it's figuring out the timeline, how much they need, how long they're going to live. But we generally put them in annuities that can create lifetime income. And those are fantastic because the rates of return on a lot of these annuities, again, have changed. If we're talking to people who thought about the annuities in the 80s, it's a very, very different product than what used to exist. And so we're seeing, even on fixed returns, we're seeing almost matching the market returns. Therefore, their money is growing and they have the ability to live off of it for the rest of their life. It keeps it safe and secure. And if they want, there are different options on actually using it for long-term care, using it for passing on to family members, or even return of principal. It's always customizable. And that's really what I want to do. There's not one size fits all. It's figuring out what is the right plan for the right individual and making, again, sure that they understand it, that they know exactly what's going to happen and if they're going to have that money to run for the rest of their life. But making sure that it is in something that is still growing, that is good at getting a better rate of return than just putting in a savings account is ideal.
Right. So important to have a little bit of growth along with income that's being produced. I guess there's tax implications to that. Do you work with accountants or tax advisors, or do you provide that?
I am not a tax advisor. I give very minimal tax advice. I do have information, but of course, working with accountants, CPAs, tax professionals is ideal, and I have several in the area that I do work in coordination with.
Okay. So if somebody is thinking about it, whatever stage of life they may be in, could be a family member, could be a daughter or a son who's concerned about a senior. Is it difficult to talk to you? I mean, do you provide initial counseling at no charge, or how does that work with you?
Okay, it's really easy to talk with me, and I love talking with everybody. I even text when people have general questions. Getting in a hold of me is super easy. You just call me at 360-633-6907. Like I said, you can also text that number. And I do provide, of course, a free initial consultation and a free financial analysis, basically figuring out where you're at. I'm also a no-fee advisor, which means I am not charging fees on an annual basis for helping you with your accounts. There's really no initial investment that you have to do. It's about helping you understand what you need and what you can maintain. And of course, people always ask me, they're like, well, how do you make money? How do you survive, right? When I work with the companies and I set you up on whatever plan it is, whether it's insurance or setting up a mutual fund or anything like that, those companies pay me directly. And so it is really nice for, especially those that don't feel like they have a ton of money to pay a financial advisor a fee, that they can actually meet with me and there's nothing out of pocket.
All right. And you mentioned earlier that you represent many different companies. You're a broker. You're not an in-house slave for one insurance carrier. So why is that important?
Selection. Really, when you start looking at it, I currently work with about 40 different insurance companies, and I work with about 20 different financial investment firms, and it's that choice, that individuality. One company is fantastic for person A, but for person B, they really can't do what they need. And so having that ability to find the right product, for me, is so important. And I've worked for individual firms, and it's hard to say, this isn't right for you. And if there's something that's not right for you, I will tell you up front. Mm-hmm. And I will also help you review anything that you currently have and see if there's something better. Because you know what, like I mentioned in the beginning, the phones. We like to upgrade our phones. Well, we need to make sure our plan, our financials are upgraded every time as well.
Yeah, that's something that that I found very important in the case of my parents. It didn't have to do with insurance, but they had hired an attorney to draft their wills and mutual powers of attorney about 40 years prior to my dad's death. And the laws had changed from the time that they drafted them and had everything prepared. And that left them wide open to legal problems, which I had to deal with. So
Well, we're dealing with that all the time.
yeah,
I mean, for instance, we just had 2 new financial laws, and most people haven't heard about the Secure Act. We had Secure Act, and then Secure Act 2.0, which just hit December 31st of last year, which has changed a lot of the retirement plans and, you know, how things can function. And so really getting with someone right now is imperative,
right,
because the laws keep changing. And then the tax law is going to change in 2026 again.
right. What is your opinion as a financial expert about this new digital currency that's going to be coming from the Federal Reserve? What impacts might that have?
It's always to be determined. When you start looking at it, we already use digital currency in an aspect. Most of us very rarely use actual physical currency, and so it's just catching up. It's making sure that everything is secure. That's really, I think everybody's, well, they're afraid of it. You know, we have so many computer malfunctions, so many you know, people stealing data, things like that, and I think that's the biggest concern with it. It's not about the stability of it, because when things are actually backed by the federal government, it does come with that level of stability. And so right now there's a lot of skepticism, but I think really it's wait and see. I don't want to make an opinion on something that is not actually functioning at this point yet.
Okay. All right. Well, do you have any final words of wisdom you want to supply to people who might watch this?
Really, it's get a checkup. You know, we all go to the doctors and we get checkups. We all, you know, make sure if something's diagnosed that we're going to get a second opinion. Do that with your finances as well. Do that with your insurance. Get a second opinion, get a checkup, check your documents, see where you're at. And if you don't understand something, get the answers. Know that you understand every detail, or at least the gist of what you have, because just like your friend, if you don't understand it, how are you going to make it work? And so education first and foremost.
Okay. Well, great conversation. Thanks a lot, Deanna. We're going to chop it off now, but I'm going to put some links to Deanna's website and her contact information in the notes below where this will be posted. So thank you very much.
Thank you.